Nvidia is firing back today to a rival's accusations. The AI firm Anthropic, in a lengthy post, saying export controls on advanced AI chips, in part calling chip smuggling into China a major threat, saying smugglers are using creative methods like hiding processors in prosthetic baby bumps and packing GPUs alongside live lobsters. Now, they didn't mention Nvidia by name, but this caught the company's attention, and Christina Partsenevelis is here with their reaction. Christina.
This is a rare public feud, and it's erupted, like you said, between two tech giants over AI chips and national security. So Nvidia today blasted Anthropic after the Amazon-backed AI startup called for tighter export controls on advanced semiconductors. That's really what got Nvidia angry. You mentioned those claims about smugglers hiding chips in prosthetic baby bumps and shipping them alongside live lobsters. Those are allegations that Nvidia dismissed as tall tales. At issue, though, are Biden-era restrictions called the AI diffusion rule, which should take effect May 15th. These controls aim to prevent China from gaining ground in AI by limiting exports of advanced chips as well as AI models. President Trump is reportedly considering updating these restrictions, adding further uncertainty to an already contentious policy. Anthropic depends heavily on Nvidia hardware, so there's the irony, but argues that, quote, maintaining America's compute advantage through export controls is essential for national security. So they want lower export thresholds and increased enforcement funding. And that could mean fewer Nvidia chips sent abroad. Nvidia fired back, saying, quote, that America cannot manipulate regulators to capture victory in AI, arguing that victory should come through AI companies' innovation, not by restricting the flow of chips. Nvidia really finds itself in a tough spot, trying to help grow America's AI supremacy while also continuing to sell their chips to other countries. But this clash really highlights the complex balance between innovation, competition, and national security as America's tech giants really navigate this increasingly competitive global AI landscape, guys.
I mean, it's complicated. You know, not the smuggling part. That part I understand, although creative. Just complicated to see the fight emerge between these two. Christina, thanks. Christina Partsenevelis.
In 2025, after years of meteoric success, Nvidia has seen some upheaval. To date, the company's stock has dropped over 20%, and its market capitalization has dropped by almost $1 trillion. Additionally, it has underperformed this year's major stock market indexes. What important indicators should investors closely monitor, and where is Nvidia's stock going next? Let's investigate and learn more. Nvidia's income has skyrocketed in the last 3 years. The company made $26.9 billion in revenue in its fiscal year 2022. However, its revenue for the last 12 months was $130.5 billion, which is 5 times more than it was just 3 years ago. Nvidia's data center division, which produced $115.2 billion, or 88% of the company's total revenue in fiscal 2025, is the driving force behind this expansion. Graphics processing units, GPUs, the workhorses of all the crucial phases of artificial intelligence, AI development, training, inference, and deployment, are designed and marketed by the data center unit. Since ChatGPT and other AI models have become so popular, Nvidia has emerged as the world's top supplier of GPUs for data centers. Research indicates that Nvidia currently makes around 3 times as much money from data centers as its 3 main rivals, IBM, Advanced Micro Devices, and Intel put together. Even though Nvidia is currently far ahead of the competition, will this advantage last? Nvidia is currently facing 2 significant concerns. One pertains to trade policy, while the other is exclusive to the AI sector. The first is whether the rapid expansion of data centers and AI models will slow down. On this subject, there is a lot of dispute. The rise of DeepSeek AI is seen by some analysts as an indication that AI models will grow more effective, requiring less processing power and, consequently, fewer GPUs to function. However, other researchers think that as the obstacles to creating new models fall, the need for GPUs will actually rise as AI models become more efficient. Regardless of your stance, one thing is certain. The question at hand is not whether the GPU market is shrinking, but rather if its growth rate is slowing. Most people agree that the GPU market as a whole will keep expanding for many years to come. Trade, particularly that between China and the United States, is the second concern. The building blocks of AI models, or GPUs, have become a national security concern as governments and militaries investigate the possibilities of these models. The United States has specifically restricted the export of some of Nvidia's GPUs, prohibiting their direct sale to China and Russia, while restricting the quantity of GPUs exported to other nations, including Saudi Arabia and India. So, what implications does this have for Nvidia stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Dan, just take us into this. What's dividing Nvidia and Anthropic here?
Yeah, it's kind of a statement that Anthropic came out with yesterday, actually. It's about the AI diffusion rule that the U.S. is kind of mulling right now. It was a piece of legislation or a move that the Biden administration had put into place, not necessarily legislation, but it's part of a Department of Commerce framework. And so what it does is it essentially sets up 3 different buckets of countries and then allocates whether or not they need certain licenses to buy AI chips or limits the number that they can buy each year. Now, the kind of idea is that this is going to, at least from NVIDIA's side, limit the amount of chips that they can sell. And NVIDIA says, as well as Microsoft says, that it would hurt U.S. competitiveness around the world in the AI space. Anthropic is taking the other stance. They're kind of in favor of the move here to ensure, as they say it, basically cementing U.S. AI supremacy at this point and keeping China kind of back behind the U.S. And so this is this kind of back and forth that you're seeing. And it's interesting because Amazon backs Anthropic. Amazon, big NVIDIA customer, but Amazon also produces its own chips. Amazon obviously is going to continue to offer NVIDIA chips. So it's an interesting dynamic here that we're seeing with, a kind of back and forth. And so the actual kind of comment of the tall tale is from NVIDIA saying that Anthropic claiming that chip smuggling into China can take the form of people using prosthetic baby bumps and packaging GPUs alongside live lobsters. So in a comment to CNBC, NVIDIA basically said, that's not what's happening. They said it's tall tales and that the idea of moving sensitive chips inside containers with live lobsters doesn't really make sense. So, I mean, look, it is worth noting that some analysts have said that the amount of money that NVIDIA makes out of China, not directly from China, but through chip movement, is a lot higher than the actual Chinese revenue that shows up on the earnings report. So, I mean, it is something that's come up before. Again, these are analysts speaking, not NVIDIA, and they say that in their own reports that anything that goes into Singapore specifically doesn't necessarily stay with Singapore, doesn't go to China, but goes around the world to different areas. So, as far as NVIDIA is concerned, there's no real issues with chip smuggling in China.
Yeah, the old-fashioned, those aren't lobsters, those are semiconductors. The U.S. also weighing removing NVIDIA chip curbs on the UAE. What do we know about that so far?
Yeah, so as part of the AI diffusion rule, there's those tiers. And so there's the first tier, which are certain U.S. allies. There's a second tier, which some U.S. allies find themselves in. And then there's a third tier, which is basically, an arms embargo, essentially. So if you wouldn't sell a missile to a country, you're not going to sell them or let them buy GPUs. It's the middle that the UAE finds itself in. And so the kind of conversation here is between President Trump and the UAE and whether or not they'll be able to get a leeway as far as the AI Diffusion Act, whether or not they'll have kind of a bilateral agreement with the U.S. where they'll be able to get access to these chips. And I think that's really the kind of conversation that's going on here. One of the concerns that's been raised about the AI diffusion rules and a kind of suggested move where the U.S. would talk to individual countries about getting AI chips is that NVIDIA's chips or other AI companies, but it's NVIDIA, would then be used as a bargaining chip in the overall tariff conversation. That's been an ongoing fear for quite a while about NVIDIA and their AI chips and what they're capable of. So this is kind of, again, just leading into these discussions about where NVIDIA stands in these conversations and how long this is going to continue to drag on. NVIDIA reports at the end of the month. Now we're in May. And so we'll see how they perform. But, obviously, any easier way for them to get chips to customers is a huge boon for them.
NVIDIA's data center business may suffer if the present export limitations in the United States are enforced further, or if other nations implement retaliatory tariffs on U.S. GPUs. In summary, despite NVIDIA's strong fundamentals, trade concerns are still a concern. When considering those fundamentals, the stock is still appealing in spite of that uncertainties. As of this video, the stock's price-to-earnings ratio is 37, which is not far from the 32 5-year low it reached in early April. Furthermore, worries about data center expansion and trade could vanish as swiftly as they appeared earlier this year. Just as rapidly as they have retreated, the general market and Nvidia stock could return to all-time highs in response to a shift in Trump administration policy or another advancement in AI. Thus, the current downturn of Nvidia stock may be a great chance for investors who intend to hold the company for the long run. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Jimmy, here's the thing, right? Can China make chips? Of course it can, right? 7, 5. They may be even making smaller ones for all I know, right? Upstream, though, chip making gear. A lot of folks say that is where, right, they really need to padlock this, right? Because you've got names like ASML over in the Netherlands. You know, when a company like that manages to derive almost half of its revenue from sales to China, the West and the U.S. has a problem.
Well, you know, actually, China's quite struggling in building advanced chips. Today, the most advanced chip that China is reported to make is 7 nanometer. That's several generations behind the state-of-the-art at TSMC, 4, 3 nanometer, and beyond. The industry's moving to 2 nanometer, really advanced new semiconductor process technology. It's going to pack even more transistors in there. And so China, in addition to being behind technologically, is behind in the scale of production. China's factories just aren't as many as the Western companies have in, say, Taiwan and TSMC. And so companies like Huawei are able to brute force put together a chip that on paper might match some of the Nvidia specifications. But to get there, they have to quadruple the size of the chip. It draws a quadruple amount of the energy, and it costs a lot more to use and is much more efficient, and they can't produce enough of them. In fact, there was a data set released by an organization recently called Epoch AI that looked at over 150 data centers worldwide for AI. There wasn't a single one of them that they could identify that was based off of Chinese or Huawei chips. And that shows that China's really struggling. These export controls are having an impact. Without some of the advanced machinery, the ability to expand their production footprint and scale down the chips, they're struggling just to be able to meet their own demand. So can they export globally and somehow swoop up and take away market share? I think there's some real doubts about that.
Yeah, and for U.S. chip export controls to successfully work, the key is that its allies, the United States allies' enforcement capacity needs to be there. Maybe some of these countries don't have as expansive enforcement capacity or willingness as the United States. Do you think the Trump administration is trying to fill in the gap here, perhaps going for bilateral agreements when it comes to diffusion rules, just so that they are making sure that these export controls work better?
Absolutely. And what we don't want is a repeat of what happened last year, which is, TSMC reportedly produced millions of AI chips for Huawei through a cutout company from China. That was a tragic mistake that, should not happen again. And the answer there is better enforcement, better monitoring. And so, the advantage of the bilateral approach is that you can, in those discussions, press these allied partners to put in place more robust compliance programs, monitoring, enforcement. Many countries, in fact, almost all countries, don't even regulate the export of AI chips. It's just the United States. And the U.S. is using its extraterritorial controls to say this chip, even though it's made in Taiwan, had some U.S. software or a machine tool that helped produce it in the factory so we could control it. But we're thousands of miles away from the United States. The U.S. government has only a single-digit number of export compliance officers out in Asia. So it's really today reliant on self-enforcement and self-policing by the industry. So any more enforcement from allies and partners is going to be a benefit to ensuring, again, that the bad guys don't get the chips. We want to ensure that these chips stay in the hands of our friends, our partners, and good companies in the U.S. And around the world.
In the aftermath of Microsoft and Meta's strong results late Wednesday, Nvidia bulls may feel some ease over the market for AI, as the two software behemoths indicated a high demand for AI tools and a determination to continue spending heavily to build out AI infrastructure. Nvidia's stock surged by almost 5% in pre-market trade on Thursday. The AI revolution is centered on Nvidia's potent CPUs. Investors' concerns about a slowdown in capital expenditures seem to be unfounded, according to Citi analyst Chris Danley. Meta increased its projection for capital expenditures in 2025 by 9% to between $64 billion and $72 billion. It was estimated to be around $60 billion. According to Meta executives, the increase is a result of increased infrastructure hardware expenses and support for AI rollouts. During the earnings call, Mark Zuckerberg, CEO of Meta, stated, "We are continuing to increase our investments and focus more of our resources on AI." Microsoft, meanwhile, restated its capital expenditure forecast for the entire year. It anticipates annual growth in capital expenditures. All of our segments performed better than anticipated overall, but our biggest clients noticed an acceleration. On a call with analysts, Microsoft CFO Amy Hood stated, "We call that the enterprise segment in general." When Alphabet released its first quarter earnings last week, it also reiterated its ambitions to invest $75 billion in capital projects. When Amazon releases its earnings after the close today, it might set a similar tone. Citi projects a 35% increase in Amazon's capital expenditures in 2025 and a 15% increase in 2026. Investors in Nvidia have so far navigated an uncharacteristically Nvidia-like year. The Trump administration's ban on AI chip exports to China and concerns over capacity overbuilds in the U.S. have combined to drive a 19% decline in shares. Although Nvidia is still expected to have a strong year financially, growth rates might not be as strong as they were in 2024, according to the read-through. However, that pessimistic outlook is challenged by the first quarter performances from Microsoft, Alphabet, and Meta. For Nvidia, Christmas arrived early. Dan Ives, a tech analyst at Wedbush, stated that big tech is not reducing its investment in AI. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Mega caps report already. We've got AWS after the bell, obviously. I think looking at some of the fundamentals, we've obviously had a lot of question points. We saw DeepSeek question the market, but some of the fundamentals are really starting to bounce back. You look at where we are with cloud growth, the hyperscalers, that's Google, that's Microsoft, that's Amazon. I expect those guys to be reporting 30% or upwards on the core profit engine for the business. So I think the key takeaway for me is, as I look at these big players, is that strong cloud growth, it's a real engine. It drives a lot of the downstream. It drives the storage, the compute, the semiconductor play. I think the other one name that stands out for me and is Oracle. They're the only one that's growing bigger than that sort of low 30% range. Their last couple of earnings have been in the 50% range on their Oracle cloud infrastructure. So those are the things I'm looking out for as we look at the sort of early part of the earnings season and those mega caps, Nicole.
Impressed with Microsoft Azure or anything Microsoft in the last round?
Yeah, I think strong growth from those guys. I think the growth, as I say, we're starting to see these cloud providers consistently grow at 30+% quarter on quarter. That obviously underpins, we're seeing a strong adoption with Copilot. So Satya was on X earlier on today talking about some of the metrics there. I think there's a lot of bullish. I think that goes downstream for the wider AI play around custom silicon, goes down through into that storage and networking space. So really bullish we're starting to see that as a consistent quarter over quarter trend.
Amazon had some great numbers. I mean, with revenue up and earnings per share beating, they had the ad growth of 19%. There were a lot of bright spots here. A little bit light on the short on the cloud revenue and some light guidance. What stands out to you with Amazon, the Amazon Web Services, the infrastructure? Is this a name you like?
Yeah, so there's a couple of things I like. I mean, Obviously, I don't track the ad business as much, but I think I'm looking at that as a key lead indicator for the overall market as a whole. I think 19% there is really strong. Maybe an anti recessionary type message that's coming through. Obviously, too early to say with some of that tariff uncertainty going on in the market, but I think that AWS has got that sort of marketplace. Amazon has got that marketplace, and that's pretty strong. I think for the AWS business, this is a juggernaut, Nicole. It's 100+ billion now as an annual business. It's a huge component of the margin structure for the wider Amazon business. They've got some strong propositions around Bedrock. They've launched their own language model with Nova. So a lot of the fundamentals there are in place. Continue to innovate on the core infrastructure as well. Down in the detail, some announcements around storage and that I covered only recently. So they're continuing to invest. These guys are the absolute beast when it comes to the public cloud, and continuing to see those guys invest in infrastructure as well, with up over 100 billion of capex that they're planning to make. So again, bullish for the overall AI trade as that comes down through Amazon's investment into the wider sector.
I know a lot of folks have been excited about AI agents and the AI race versus China and such. Is there a wow moment here? Is there something as a person who is so immersed in technology that you're saying, this is really great, here's what we really have got?
I think there's been a lot of coverage around Huawei. I'm sort of skeptical there. I think they're always going to be a regional player. I don't see those guys genuinely innovating and taking share from the sort of AI industrial complex in the North American and sort of wider global markets. Yes, they'll supply local suppliers, the Tencents and the Alibabas and the other providers and service providers in the Chinese market. But I genuinely don't see them sort of impacting on the wider NVIDIAs, the AMDs, the ARMs, the Intels ultimately, from a silicon perspective, or into being providers to any of the hyperscalers, as we've already mentioned. So I think for me, the big kind of wow moment, I've been out with Logic Monitor this week. I'm off to IBM next week. As I spend time with the senior leaders in these organizations, we're now to the point where these agentic offerings are starting to become real and are starting to get deployed at scale. And crucially, we're starting to see them translate into revenue for these organizations. So I think a lot of the hype we've been talking about over the last 3 months starting to really manifest itself in the earnings, and we'll see that through the rest of the earnings season as it plays out over the next few weeks.
Yeah, what about just a quick thought on NVIDIA? Obviously, we have headlines every single day, but a thought on NVIDIA right now at 111?
So I think those guys are really solid. I think CUDA's a moat. I think they've got true, genuine innovation up and down the stack. Jensen's running a powerhouse of a business there. I think solid fundamentals. Yes, they get rocked by the news occasionally on the daily basis, the Huawei stuff, the DeepSeek stuff. But I think those are just temporary blips, Nicole. I don't see them as affecting the fundamentals of what's a juggernaut and a powerhouse of a business. There's going to be a picks and shovels play for AI for many quarters to come.